Welcome to Financial Habits. In this video we are going to talk about top dividend stocks for June 2021. So before starting this video, like this video, and subscribe to Financial Habits for future updates. Companies that pay out a percentage of their earnings to a class of shareholders on a regular basis are known as dividend stocks. These businesses are often well established, with consistent earnings, and a history of returning a portion of those earnings to shareholders. Dividends are paid out in the form of cash or more stock and are known as distributions. The majority of dividends are paid out quarterly, although others are paid out monthly, annually, or even once as a special dividend. While dividend stocks are noted for their consistent dividend payments, dividends may be reduced in adverse economic times to conserve cash. The dividend payout ratio is a valuable metric for investors to determine the long-term viability of a company's dividend payments. The ratio is calculated by dividing total dividends by net income, and it tells investors how much of the firm's net income is returned to shareholders, as dividends versus how much the company keeps to invest in future growth. If the ratio is greater than 100% or negative, i.e., net income is negative, the corporation is likely borrowing to pay dividends. The dividends in these two circumstances are at a higher risk of being reduced. We examine the top 5 dividend stocks in the Russell 1000 by forward dividend yield, omitting businesses with payout ratios of 0% or more than 100%. The first 4 stocks outperformed the overall market, as measured by the Russell 1000 index, while the fifth and final stock underperformed. Over the last 12 months, the Russell 1000 has given a total return of 46.3%. This market performance number, as well as all of the information below, is as of May 25, 2021. One Main Holdings Inc. is a company that owns and operates One Main Holdings, OMF. Dividend payments in the future 13.06% yield. 85.8% payout ratio. The cost is $54.93. $7.4 billion in market capitalization. Total return in 1 year, 207.4%. One Main Holdings is a consumer finance-focused financial services holding company. One Main generates and services secured and unsecured personal loans through its subsidiaries, as well as providing a variety of credit insurance products. The company has 1,500 locations across the United States, and offers a digital platform that allows clients to apply for products online. One Main increased their minimum quarterly dividend by 56% to 70 cents per share on April 26, 2021. Investors who own qualifying shares in the company at the end of May 6, 2021 will receive the dividend on May 13, 2021. IKE Capital Management Inc. is a company that manages money, NLY. Dividend payments in the future 9.69% yield. 31.5% payout ratio. Cost, $9.23, $12.9 billion in market capitalization. Total return in 1 year, 63.2%. IKE Capital Management is a diversified capital management firm that buys and sells residential and commercial real estate. Agency mortgage-backed securities, residential and commercial real estate, and middle market lending are among its investing strategies. The company's overall assets are estimated to be around $100 billion. AGNC Investment Corp. is a company that invests in a variety of AGNC dividend payments in the future 8.03% yield. 29.1% payout ratio. The cost is $18.53. $9.7 billion in market capitalization. Total return in 1 year, 55.0%. AGNC Investment is a self-managed real estate investment company, REIT, that invests largely in leveraged agency residential mortgage-backed securities, RMBS. It finances its holdings using buyback agreements, which are collateralized borrowings, repos. 5A repo is a sort of financial instrument, in which a borrower sells a financial security to a lender, and concurrently promises to repurchase the asset at a later date and at a somewhat higher price. New Residential Investment Corp. is a company that invests in residential properties, NRZ. Dividend payments in the future 7.46% yield. 56.1% payout ratio. Cost, $10.24, $4.8 billion in market capitalization. Total return in 1 year, 56.9%. A mortgage REIT is new residential investment. The mortgage and financial services businesses benefit from its money and services. The firm invests in assets that generate consistent, long-term cash flows. Mortgage servicing-related assets, non-agency securities, residential loans, and other associated investments are all part of its investment portfolio. Equitrans Midstream Corp. is a company that operates in the midstream oil and gas, ETRN. Dividend payments in the future 7.35% yield. The payout ratio is 69.7%. Cost, $8.25, $3.6 billion in market capitalization. Total return in 1 year, 13.4%. Equitrans Midstream is a provider of midstream energy services. Its operations are centered on natural gas development and production by way of gas transmission and storage networks, gas gathering systems, and water services. Its primary assets are spread over the Appalachian Basin. Here we have information from another website. Let's see what they have to say. The first company on the list is Abbott Laboratories, Inc. Abbott, a global seller of healthcare products. Pharmaceuticals, nutrition, diagnostics, and medical gadgets are among its product categories. First, let's look at the technical picture. I search for stocks that are experiencing a decline when deciding on a great contender for long-term dividend growth. Performance for 1 month, -3.41%. Big money buy signals in the past. Abbott Labs has made the following big money signals since 2015. According to map signals, Abbott was witnessing a lot of buy activity, as indicated by the green bars. The more big money signals a stock receives, the more powerful it is. In addition to technicals, you need peek inside the hood to see if the fundamental picture supports a long-term investment, while choosing on the best dividend stock. As you can see, Abbott has a long history of paying dividends. Rate of dividend growth over 3 years, plus 10.8%. 45 cents per share is the current dividend per share. 1.54% forward yield. Earnings growth rate over 3 years, plus 158.04%, Costco Wholesale Corp. Cost is the next company on the list, with membership warehouses across the globe. They sell both branded and off-brand retail items. It's a good idea to check for many years of dividend increases when choosing a great prospect for long-term dividend growth. Let's have a look at some recent results. Performance during the course of 1 month, plus 4.80%. Big money signals in the past. Costco's major money signals since 2015 are listed here. In the next years, I anticipate to see more purchase indications. End-of-day data from Tingo.com was acquired via map signals. In addition to technicals, you need peek inside the hood to see if the fundamental picture supports a long-term investment, while choosing on the best dividend stock. Costco has a long history of paying dividends, as you can see. Their earnings have also increased dramatically. Rate of dividend growth over 3 years, plus 12.4%. 79 cents per share is the current dividend per share. 82% forward yield. Earnings growth rate over 3 years, plus 14.04%. Next, I'll take a look at Analog Devices, Inc. RD, a major semiconductor business. They have a long history of paying dividends. The current performance of the shares is significant when deciding on a great prospect for long-term dividend growth. Performance over a month, plus 1.92%. Recent big money indications. Analog Devices' large money signals since 2015 are listed below. The stock has clearly been on a strong upward trend. End-of-day data from Tingo.com was acquired via map signals. In addition to technicals, you need peek inside the hood to see if the fundamental picture supports a long-term investment, while choosing on the best dividend stock. As you can see, RD has a long history of paying dividends. Rate of dividend growth over 3 years, plus 10.7%, 69 cents per share is the current dividend per share. 1.69% forward yield. Earnings growth rate over 3 years, plus 24.62%. Following that, I'll look at McDonald's Corp. MCD, a multinational fast food franchise corporation. They have almost 39,000 restaurants around the world. Recent muted performance is not a bad thing when choosing a solid prospect for long-term dividend growth. Performance for 1 month, -0.07%. Recent big money indications. Since 2015, McDonald's has made the following big money signals. End-of-day data from Tingo.com was acquired via map signals. Let's look at the fundamentals as well as the technicals, while choosing on the finest dividend stock. As you can see, McDonald's has a long history of paying out dividends. Rate of dividend growth over 3 years, plus 9.6%. 1.29 is the current dividend per share. The yield on the forward contract is 2.2%. Earnings growth rate over 3 years, plus 0.9%. Finally, I'm considering Nike, Inc. NKE, a well-known athletic footwear and apparel company. I like to check for recent leaders when selecting a solid prospect for long-term dividend growth. Performance over a month, plus 2.07%. Big money signals in the past. Since 2015, Nike has made the following big money signals. End-of-day data from Tingo.com was acquired via map signals. In addition to technicals, you must consider if the underlying picture supports a long-term investment when choosing the greatest dividend stock. Nike has been steadily increasing its market share. Rate of dividend growth over 3 years, plus 10.9%, 275 is the current dividend per share. 81% forward yield. Earnings growth rate over 3 years, plus 8.22%. Final thoughts. Abbott, Cost, RD, MCD, and NKE are all good dividend stocks to consider. These stocks may be worth a second look for dividend investors, given their high historical dividend growth and big money signs. What do you think about this video? Do let us know down in the comment section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.